For today's video, I will be solving problem number 2 and 3 of set-off or input tax credit under GST. So we had already discussed about ITC set-off rules. So we have here in this problem ITC available of IGST, CGST, SGST, and the output liability, tax liability, which the businessman has to pay is IGST of 25,000, CGST is 15,000, and SGST is 40,000. So we already know the rules of set off. So first, the business is having around IGST of 20,000. So whenever IGST is there, that can be used to pay the liability, means the businessman is supposed to pay around 25,000. So this 20,000 can be set off against 25,000 of input tax credit. So balance is rupees 5,000. So 5,000 needs to be paid. But now we already have CGST of 30,000. So whenever CGST is there, this can be used to set off IGST first. So how much IGST is there? Total 5,000. So from this 30,000, 5,000 we can deduct, and we have around 25,000 CGST. Yes. So as per the rules of input tax, once we set off CGST with IGST, next it can be used to set off with CGST. So we have 25,000, but the liability is only 15,000. So minus 25,000, and this is nil. We don't have to pay any CGST. So how much balance is remaining? 10,000. So we have around 10,000 of input tax. So we have input tax credit of CGST of rupees 10,000, which means that we don't have to pay anything of IGST, we don't have to pay anything of CGST. On top of it, we have CGST input tax of 10,000. Now third one, we have a CGST of 30,000. So CGST we have to set off with, SGST of around 30,000. SGST we have to set off with SGST of 40,000. So 30,000 minus liability of 40,000, we have 10,000 balance which is remaining. So in this answer we have input tax credit of CGST of rupees 10,000 and the liability of SGST of rupees 10,000. So very simple problem to solve. I will just show you in a proper format manner the solution part. So first one is IGST of 25,000, and we had input tax credit of 10. So 5,000, as we have discussed, is remaining. So but we have CGST, so that can be used to set off 5,000, and we are having around 15,000 of CGST. Yes. Now next one is SGST 40,000, but we have input of 30, so 10,000 is remaining. So remaining IGST, CGST is used, so that we have already discussed. So IGST is 0 and SGST is 10,000. So basically the answer is, as we have discussed, cash payable is around 10,000 of SGST, and CGST we have input tax which needs to be carried forward of 10,000. So this is solution of problem number 2. Now next we will go to solve problem number 3. Again, basic problem. So in this we have IGST of 15,000 input tax, then CGST of input tax 20,000, SGST 20,000, and we have liability payable of 20,000 of IGST, 10,000 of CGST and 10,000 of SGST. We need to find out whether there is input tax or the tax payable. So first rule is setting up of IGST with IGST. So we have only 15,000 but payable is 20,000. So 15,000 minus 5,000 is remaining. So this needs to be paid, but we will see whether we can utilize CGST or not. CGST we have 20,000. So this 20,000 we can utilize to set off 5,000. So from this we will deduct 5,000. 15,000 is remaining in CGST inputs tax credit. So this 15,000 is gone, this 20,000 is gone, and 15,000 is remaining. This 15,000 can be utilized to set off 10,000 of liability. So if we use this, we are having balance of 5,000 rupees. So this is input tax credit of CGST that can be carried forward. Now next one is we have SGST of 20,000, but we just need to pay 10,000. So this can be set off, and we have, after setting up, we have input tax credit of 10,000 of SGST. So in this both the cases we have ITC of both, that is 5,000 and 10,000. So we will see the solution in more structured manner. So first one is IGST, so which we have seen why 5,000 is remaining. Then CGST 10,000 is remaining, and SGST 10,000 is remaining. So cash payable is nil because there is no liability, but CGST is 5,000 which is remaining, and SGST is 10,000 which is remaining. So with this we have solved the basic problems of set off of input tax credit under GST. Thank you, students.